So traders, what I want to do in today's video is I want to get ready for the week moving forward. I'm going to be looking at all the markets like the indices, be looking at gold, silver, Bitcoin, the cryptocurrencies, and giving you a bit of a short-term technical analysis update across these. And also what I want to share with you is I want to share with you how one domino is about to fall. And if it does fall, it's going to pull all the other dominoes are going to come crashing down. And also I want to share with you one challenge that I want to give every single one of you traders watching this video right now. I want to give you a challenge of something that you could do to help you increase your success rate. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right, traders. If you haven't done so yet, see that trading course there right now? You can pause the screen. You can see all the details there. I'm giving away for free. You need this trading course, okay? If you're struggling with trading right now, you're normally going to spend thousands of dollars out there. Go get the trading course right now. johnsfreegift.com or very first link in the description. So let's actually get into the markets. But before I do start, I want to start off with the challenge, okay? I want the challenge that I talked about in the intro of this video. The challenge is this. Now, here's the thing. A lot of individuals that trade the markets, I've been trading the markets for 18 years myself, okay? And throughout that 18 years of me trading the markets, I have done a lot of dumbass shit, all right? Really like a lot of dumbass shit. My first 5 years, I lost $250,000 trading. And a lot of that was actually borrowed money. So think about that, right? I was actually more like $400,000 in the hole because I actually had to make all that, I had to make that money back, then pay taxes, and then be able to pay that guy back, if you know what I'm trying to say there. But anyway, and that was my dumbass decision. Again, that was back when I first started trading, right? So I've done a lot of mistakes when it comes to trading these markets. And when I do these market updates and I do these little things for you, I'm doing it because I really do care for you, okay? I really do care and I really do want to see you succeed. It's not because I'm trying to be right or, you know, look at me, I'm doing this sort of stuff. I really want to help you out. And the purpose of me telling you all of that is that I have learned that trading is never about saying, okay, then, right, let's actually, you know, we can see, all right, let's go have a look at the SPY today. And we can see the SPY, it's had a little day today. So today I'm going to go short because of the 50, no, okay, no, all right? Or, you know, or you're looking, okay, well, I guess there's a bit of resistance, like, no, all right? A lot of the times, what I'm trying to say there is that a lot of the times we're trying to guess when a good time to get in. And one thing I've learned is that me guessing, like, oh, I hope this is a good trade. I hope this is a good trade, right? Me doing that caused me so many, like, again, guys, as I'm saying, like, if you guys are having a hard time trading the markets right now, and this is like a bit of a Monday motivational speech before I get into the dominoes falling and so on and so forth. And if you want to skip this little motivational part, you can see the little things down below. You can get straight into the market updates. But for you that actually really want to learn how to do this professionally, one thing that I've learned is that professional trading is all about understanding understanding their system and their patterns and their processes, right? Their structures. There's no guessing, and a lot of you traders right now are guessing. Well, you know, well, the market update that John did said the market's going to crash, so therefore I'm going to go short right now. No, right? So I'll do a market update for you, and the market update, what is a market update? It's just an update of what the market's doing. That's not saying to trade that analysis, right? Yes, I believe the overall market is going to be in such a terrible bear market next year. Why? Recession's coming, blah, 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 blah. All right, that's all coming there, right? And technically, we're in a massive bear market right now. We went through that in the past, okay? And plus, I'll walk through that in the update. I believe that. But does that mean I say go short right now? No, an update does not mean trade, okay? And there's a really big thing. And if you're on my list right now, you would know I sent out an email on the weekend with a 30-minute video showing you all my bullish trades and all my bearish trades that I've been taking. And they have all one thing in common. Guess what? And yes, I have losing trades in there as well too. But all of my trades have one thing in common. What is that? They all look the same, right? There is no difference. And again, I'm not going to walk through the trading system here because it takes time, right? In that free trading course, I give you my trading system for free, so you can start to look for the pattern that I use to trade. But you see what I just said there, right? It's a pattern. And so therefore, I'm not guessing. And so if you're trying to like, well, I'm going to go short because this YouTube video, no. If you're always trying to trade based off someone else's analysis, remember, it's just an analysis and trading are two different things. Analysis is just like, okay, this is what's going on in the markets right now. Trading is all about having a structure, a pattern set up, and then off that setup, you have your entry, you have your time to enter, and then you have your management of that. How do you manage that? Do you get out quickly, or do you let your profits run? All that sort of stuff, right? So that's how professional trading is done, because what I want you to do is I want every single one of you traders right now to build a solid, strong foundation. And that's what that free trading course in the link in the description is all about, right? Because the very first 30-minute video you get out of like, it's like 7, 8 videos or whatever it is actually a 30-minute video walking you through the biggest mistakes that you're making right now and how to actually stop them, okay? And so the bottom line here is that if you've been trading the markets for quite some time now, okay, you probably see all the different patterns and the different setups and so on and so forth and all the different things, right? And this is what the market does. As the market flows, and I'm looking at the SPY right now, as the market flows, they make different patterns, right? And they make bullish patterns, they make bearish patterns, and you probably and if you are using things like stochastics and RSIs and all that sort of stuff, which I believe is slowing down your progress towards you becoming a really successful trader, I really do believe that. And traders, when I'm talking successful, I'm talking about making $5 to $10 million a year. Now, no, I don't make $5 to $10 million a year. My mentor does, and my coach does. But I have my success, and I've become so much more successful now of mastering the markets, right? And mastering how to actually read the chart, because all that other stuff, the RSI, the stochastics, and so on and so forth, they're okay. And I use them for like 10 plus years, right? In my last 18 years of trading the markets. But the thing is that one thing I learned is that all of that is a derivative from the main thing, which is the market, right? And so the better I can actually get good at actually reading, what is this market really telling me? What is the buyers and sellers really thinking and feeling right now, so I can see what's going on. And as the market unfolds, you start to get different patterns, different setups. And it could be anything out there, right? It could be a swing trade. It could be, it could be, you might say, and again, I'm not saying don't use stochastics, right? And again, I used stochastics in the past. But one thing, one thing I do say is that what patterns do you find most? What patterns do you know inside yourself that when it sets up, you're like, oh my goodness, this is such an incredible pattern. It might not set up much, but like, oh my goodness, this is the pattern for me, right? This is the setup that I know that if I trade this pattern only, then I know I'm going to do well. The only problem is that I have to be patient, right? I might not get a trade every day. I might not get a trade. I might only get one trade a week. Heck, I might have some weeks where I don't have any trades. That's the downfall for you guys, right? A lot of you traders right now that are trading right now is one, you don't have the first thing I just said there, which was, what are you actually looking for in a really good setup, right? Let's actually be real here, because if you actually want to do well from the markets, you can just guess, gamble, and then point the finger at everyone else. But then at the end of the day, your bottom line still sucks. Let's actually be real here. Or we can turn this around and actually be real. So I can then, firstly, actually, yeah, if I'm actually looking at the markets, I'm not looking at the markets and I'm trying to, oh, well, I should go short here, I should go long here, blah, 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 blah. Like, no, okay, no. What am I looking for? What actually am I looking for in a really good setup? And then my job is to go through the markets, go through the stocks, go through the markets like I do. I go through all the individual mining sectors and all the different S&P 500 and the different stocks through there and the Russell 1000. I go through a whole scan. I have a scanning process that helps me scan for my setup. Again, I'll teach you my setup in that free training course. And so the bottom line here is that what are you actually looking for in this thing here, okay? What are you actually looking for? What is your setup when it comes to the setup, then off that setup, what is your entry bar or candle, depending on what you're using? I'm using a bar chart now, so we use a bar. What is your entry bar off that pattern, right? And then how you going to manage that, right? So there's 3 different things there. It's like 1, what is the setup, right? What is the setup? 2, what does the entry bar look like? And 3, how you going to manage that? And then obviously 4, then obviously you got your money, or maybe this could be right? Management and money management, right? And that's what professional trading is all about. And so you guessing and gambling is going to stop there. So anyway, let's get into the market update right now. We'll go into the thing that I was talking about at the start of the video, which is the dominoes. If one domino falls, they all fall. Now, what am I talking about there? So looking at the Dow Jones, you can see that we've made a very, very, very big move to the upside. Okay. Now, foundational, how does the markets work? Does the market just keep going up? Let's actually be real here. Does the market just go up, and then stop, and then just keep going up, and up? Does it do that? Nah, right? What tends to happen? We end up getting pullbacks, right, like this. Sometimes it's not. Sometimes it's actually not as much of a pullback like this, right? Sometimes the market will just do this. Sometimes the market will just go straight up like this. It'll pull back maybe 50%, the good old 50% retracement, and then it'll continue the upward trend, right? We know that. So sometimes it'll do that. But inevitably what happens when we have too much of an upward move, we get to a point where there's equilibrium, buyers and sellers, right? And then we start to see the market selling off through there. Makes sense? So therefore we're likely to get at least a pullback. If we use the exact same analysis I just used just then on the Dow Jones, we can see on a fundamental level basis, we can see that we've actually had a very big move up. So there's probably going to be a lot of equilibrium coming into it right now. And look at that volume there coming in, look at that stair stepping down volume as we creep up to new highs. And then as we also start to hit this level of resistance, there's a high probability we're going to start to see at least a pullback to 50%. Okay. So there's a high probability of that. And then if I start to bring on my moving average, which is my 52, I use the 52 moving average on pretty much most of my charts, apart from weekly. Weekly, I use my 20 moving average because it's more like a 20-week sort of type of thing. And then the 52 is like 52 weeks from 52 days from there. And then also when I'm using my shorter term time frame charts, I like to use it as well too. I think 52 is quite good from from the dailies down to the hourlies, 15 minutes, 5 minutes, 2 minutes, 1 minute, so on and so forth. Okay. And also, what do you notice through here as well too, right? You'll notice when the market actually gets too far away, we actually start to get too oversold, right? So a lot of traders, they use the stochastics to say, okay, we're oversold right now. The problem I found with using stochastics and RSIs is they can become pinned, right? So you may get the stochastics might get up here and it might be oversold, and then it just stays here. It stays oversold while the market's doing this here. So we can see now that when we get too far away, when we get the maximum distance of far away, maximum distance, as you can see through here, right? Maximum distance through here, even through these points through here, we start to get what? We start to get to the oversold level. Now, there's no exact science of this, therefore it's oversold, therefore I'm going to go short. No, that's what I'm talking about, right? All I'm talking about is just reading the markets, like, and then this is where we're at right now. And so therefore, because we're so far away from the moving average, we're likely to at least get a retracement of around that 50% level. With me so far? So if I bring on the good old Fibonacci tool, right? So we're probably likely to at least get a pullback down to maybe, I'd say 3150. Now, and this will be the key area for the Dow Jones, right? This will be the key. This 31,500 to 31,000. That'll be the key area for me. Once we start to see a pullback, we will get a pullback, guys. Okay. Now it might not be a complete meltdown and a complete bear market. I do think that, but that's my thinking. My thinking means nothing. Let the market talking. Okay. So by looking at that, we can see we're probably likely to get that. Now, if we actually do get a pullback down towards this level through here, and we don't hold the 50 to 60% retracement level, then we're in big trouble when it comes to the Dow Jones. Now here's the thing. At the start of the video, I talked about how if one dominoes fall, they all come crashing down. And therefore, this domino is likely to fall, okay? So look at this here. The Dow Jones has actually had the biggest move to the upside, right? So now what I want to do is now I just want to move this. I want to take everything off the screen because I want to keep it really, really, really blank and simple, right? So do you notice how the way that I look at my charts? I'm not even using volume most of the time. Do you notice that? What am I looking at? There's not even nothing on my charts. Most of the time there's no moving averages on there. I do add moving averages, but do you notice most of the time I'm just analyzing the market itself? Because that's the main thing, right? That's the main thing. All the other stuff that we talk about, the RSI, stochastics, even moving average, it's a derivative of the main thing. And that's where 90% of my analysis comes from, understanding the main thing. Therefore, if we get better at the main thing, right, we're going to the source of it. So we can see that through there. But look at this here. So the Dow Jones has actually had a big rally. But now let's go to the S&P 500, right? So we're going to check out this S&P 500 chart. But notice the S&P 500 chart, where the Dow Jones actually has had a very big move up towards this what? Towards high point up here, hasn't it? What is the S&P doing right now? It is not doing that, right? What is it actually doing? It is doing what? It's actually even just having a pullback, right? We're nowhere near the highs up here. And if we start to bring on some good old trend lines, do I have my trend lines here, Sean? I do, yes. If we start to bring on trend lines, we know we're still in a very big downward trend through here. So if one dominoes fall, i.e. the Dow Jones starts to really get that big pullback, it's going to drag all the other markets down. And especially when we see like things like the S&P 500, and I'll get to Nasdaq in just a minute, but the S&P 500, we can see that it actually still is quite weak. If we go from the high down to the low, look, we're just in that 50 to 60% range. So we can see that we're still in a major downward trend, right? So we have these major highs, lower highs, and lower highs coming down. So this is probably going to be some sort of major lower high again. It's just one of those bear market rallies. And the confirmation for me to say that this is a bear market rally is a break below these significant levels through here. So there's two significant levels I'm watching on the S&P this week, okay? The first level, there's two levels that actually, I'll take the Fibonacci level off because we don't need that anymore. Do you notice how I try to keep my charts really clean, right? I try to keep it really, really clean with not too much on the charts. So many of you guys have got so much stuff on the charts, right? But again, it's always the chart itself. So for me, if we start to get something like this here, and then we start to get maybe something like that, and then we get maybe like a breakdown like here, especially like a breakdown below that level through there, if we get something like that, then that's going to tell us, one, that this is now, remember, because this was a high, and this is now another major lower high, that this is just what? This is just another pullback and then a dump. Pullback, and now we're probably going to go through another big rip to the downside. Now, once again, if the Dow Jones dominoes falls, it's going to bring all the other markets down, and the stock market itself is not actually, the S&P 500 is nowhere near as strong as the Dow Jones, and the Dow Jones are likely to get a pullback. Do you see where I'm going with this update here? Okay, so they're the big keys. They're the big keys that I'm watching for. And once again, that 3,900 level is definitely like that X marks the spot. And if we do get something like this one, as I said before, we get something like that come breaking down, then we may get a little few up days through here like this. But then we're probably going to start to head back down towards these lows through here. Because at the end of the day, what is this? This is just a big pullback in an overall bear market trend. If we start to get that rolling over effect on the Dow Jones, it's going to drag the S&P along with it. Now moving over now through to the Nasdaq. And the Nasdaq is the weakest one out of the whole lot. So if one dominoes fall, they all come crashing down. Okay, and that's therefore the Dow Jones is, because the Dow Jones is the strongest, we're likely to get the pullback. Therefore, the S&P has got a good pullback. And now the Nasdaq, what is the Nasdaq doing? The Nasdaq is the weakest one out of the whole lot. And look at this here. Remember, the Dow Jones did what? The Dow Jones did this, where it's actually at that highlight there. The S&P did something like this. So the S&P has done something like this, right? Where it's had a nice move up, where the Nasdaq has done pretty much nothing through there. Right, if I squeeze my charts up a bit more through here, let me take this off the screen. if you look at this here, what do we have? We have what? Look at this. Look how weak this is. See how weak that is? That's a warning sign, guys. Look at this here. We had a very there's things called angles in the markets. Okay, I'll do a little bit of a class here. If a down market is doing this, right? If a market goes down like that, see how it's very strong on the downside. If a market goes like that, it's very strong on the upside, right? But if that's very strong, if this sort of angle of the markets, right? If the move of that there is very strong, right? What does that mean? Therefore, if that's a strong move, this is for a weak move. Now, what does that actually mean? It means the buyers are weak here. What does that actually mean? It means the buyers are really weak. So therefore, if the buyers don't come in hard soon, which again, anything is possible in the markets. If the buyers don't come in hard soon, what's going to happen? The sellers are going to regain control, and therefore we're likely to start to see some really big selling through here. Make sense? It's all about who's more dominant in the markets at that time. And if I'm looking at in one corner, ding ding ding, boxing match, we have the sellers, and ding ding ding, and in the other corner we have the buyers. And they're going at it. And we can see here we had what? A very big strong down leg. That was the last selling leg, and this has been the last buying leg. So out of all these legs, out of both the last selling leg and this recent buying leg, who's more dominant? Who would be winning the boxing match? The sellers, right? Because the sellers are like, yeah, we're strong, we're strong, we're strong, we're strong. That's round one and round two, right? And then maybe the last couple of rounds, the sellers got a little bit tired, but the buyers got really, really, really tired. But the buyers just couldn't do much, right? And then guess what happens? Then the sellers, what happens here a lot is then the sellers, then they regain their energy and then they knock it back down again, right? You see this happen so many times. Look at this here, up, and then we just went sideways, didn't we? Didn't do much, right? But we didn't actually have that, did we? No, we actually had a very move up, sideways, and then we had the next move up from there. So if the buyers don't come in hard really quickly out of the Nasdaq, this pattern through here, call it a bear flag if you want to, it's showing that the buyers are very, very, very weak here. And if we start to, and if we actually, let's bring on some good old trendy lines. And if I bring that up through there, let's actually zoom in on here on the Nasdaq. That main area, which is, what is that area? That whole main area through there, which is that 10,500 level. That's definitely a big key area for me. 10,500. But then if we have a look at the overall, let's have a look at that there. So that'll be the angle I'm using. Let's actually make you a bit thicker, right? Let's make you thick, baby, thick. I hope that's not what she said to you. What a fucking kick to the ego if she said that to you. Oh man. All right, so we're actually in this bear flag, right? So the big key I'm watching for is what actually happens here. If we start to get something like this, and then we get some sort of big breakdown bar like that, guys, breaking below that level there and below this major support level, and we know what? And we know this is just an overall weak pullback of the big picture analysis I just walked you through, and then we start to get that movement down, that could be the start of a really big move. Why? Because when I zoom my charts out, where's support here? Now, for you guys that actually follow my actual trading system, you will know that this is actually setting up to be a potential good trade for me on the downside. So while everyone's going to be flinging themselves out of buildings, and I hope you don't do that, right? You can come back. Doesn't matter how devastation your thing is. You know, if you are going through a hard time right now, do not be thinking about that, right? Your mess will become your message. Right? It's just, you might have to go through a couple of year period of going through it, but then on the other side of that, you're going to kick ass, right? So, but don't ever quit. Just remember that the most successful people on this planet go through have gone through a lot of trials and tribulations. It's just not you, okay? So therefore, once we break this 10,500, look at this here. There is no support. And if once we start to do that, we could, it's all over for the Nasdaq, right? And the Nasdaq could be the Nasdaq could be the big short coming into 2023. So we're looking at that through there. So if I look at that, we could actually start to, where's 2023? 2023, if I actually let me take that off the screen here for a minute. Yeah, I'll take that off the screen for a minute. Because I'm doing some simple analysis here. Let's actually bring this down here, probably that level through there. And the reason I'm doing that is that the Nasdaq we could just do this, right? So this is 2023 right here, right? What if the Nasdaq just did this for the next month, did that, and then we started to get something, and then we started to get something like this, breaking down below that major support level next year. It's gonna be the big short. The next big short, I believe, is the Nasdaq. If that's the if, and I know your Bombay's gonna, oh John. No, if we do get that pattern, right? So there's a bit of update on the stock market there. Let's go have a look at gold, and gold is working out exactly the way that I saw it working out, guys. It is working absolutely spot on, and you guys have been following me for the last few weeks. You would know that. Down the bottom here, I started calling this a false breakout. We're likely to get the rally. We got the rally. And then I said, we're likely to get a pullback now because we got the big pullback. And now we got the pullback. And we're still in this overall we still are in this overall pullback phase through here, okay? And we've got to wait and see what actually happens now with gold. Now, if gold is going to work out the way that it normally works out, which it rallies before recessions, we're probably going to get a strong rally, and this is probably the sign of the market starting to get that big movement up, right? So we definitely have a nice pullback through here. We definitely are starting to see an upward trend. So you can see here we had these highs, okay? Lower highs, lower highs, lower highs, lower highs, and now triple bottom, higher high. If we start to get some sort of a higher low through here, right, and we start to do something like this, and then we start to build back up. Oh, get on. No, I'm not saying buy it, okay? Remember, if it meets your trading plan, you trade, okay? But I'm just saying that therefore we could start to see an extraordinary quality move. Now, guys, what I'm talking about here in this whole video is trading the markets, okay? Investing is a completely different thing, right? Investing is a completely different kettle of fish. It's when you invest in the markets, you invest. And your thoughts and your thinking and your management and the way you see things is completely different, okay? Because when I'm investing, which I invest in gold, silver, and the mining sector, I'm investing for the next 10 years. I don't really care what happens the next 6 months. You see what I'm saying there? So that's, if you're investing in the markets, don't buy gold today because you see it's going to have a really big move for the next 10 years and it goes down tomorrow or goes down 10% over the next week. Like, oh my goodness, the market went down. Like, no, don't be a baby, right? So the whole thing about so that's what I'm saying through that's what I'm saying there when it comes to gold. Let's go have a look at silver. Silver's been one of those just lackluster dugs, right? And I'm a bit I'm not too sure about silver's actually one of those weird ones, right? We found that major support. Look at this here. Look at this here. All that last major resistance back in 2020 became what? Resistance. Now resistance is like you're hitting against the wall, right? Look at it. And bam, and bam, and bam, right? You're hitting the resistance, hitting resistance. And then you break the resistance. And now here, see how it's supporting it up. It's supporting it up. It's supporting it up. It's supporting up. So now we're actually starting to get a bit of a higher high here. We actually can see we're starting to get a higher high. We found a lot of support here. This is resistance, right? Resistance is like you hitting your head on the roof. Support is like the floor, right? The floor supporting me. So we find that that's support level through there, and now we're actually breaking up through here. So the big keys I'm watching for is if gold does go for a run and silver's going to follow, the first thing I'm noticing is that we've actually got this really significant higher high through here, right? And we've got this high through here as well too. We've sort of got an equal bottom through here, so we still haven't got a significant higher low. What would be really powerful is if we did start to see something like this, where we started to go sideways, but then we maybe started to do something like this, and then we got a big breakout bar or something like that. Something like this pattern here, which will show two major things through here. Firstly, it would show that the market is now starting a new upward trend in the markets. Okay. Secondly, it'll be breaking past two major levels of support. It'll be breaking past this level through here, right? So that major level, which is $22, but also this other trend line through here. So therefore, we'll probably get a bit of a pullback, right? And then we're probably going to see a really big move, probably back up towards these high points up through here as well on silver there. But silver's not out of the woodwork yet, okay? If we have a look at the weekly chart on silver, we are still in a very big downward trend when it comes to silver. So we have this down, and then we have up, and then we have down, and then we have up. So we really need this. This actually could be doing this here on silver. I know that sounds weird because gold's actually doing what it's doing right now, but that's what we're seeing right now when it comes to the good old silver market through there. Let's go have a look at the mining sector. Let's go have a look at the GDX. And the GDX, as you guys know, the mining sector, I called for a bottoming pattern. I called for a rally in the mining sector, and it's exactly what's happening. Now, I called for a rally, not a changing trend. Okay, I called for a rally. Why? Because I just saw this market coming down too much. Remember, if you've watched my entire video so far, you get the cookie, right? Actually, type in cookie below if you have actually watched this entire video all the way through. If you do, I'm so proud of you, right? Because why? At the start of the video, I talked about the Dow Jones being too high, and we're likely to get a pullback. Therefore, and this one here is we've had a very big move down, and we're just likely to get what? Some sort of a pullback or some sort of a rally out of it, right? But we're not out of the woodworks yet, okay? This rally could be ending now, and the rally that I talked about has happened. And the reason why I say that is because look where we're at right now. That $28 level is resistance, and we are in actually a bear market on the mining sector. So we may not be getting more upside through here. And if the stock market does start to roll over, maybe the mining sector is going to get a hit as well too. I'm not too quite sure about that, but we are now having a strong move down, and now we're getting a pullback. We may get a little bit of a rally up through there, and then maybe something like that coming through there. Looking at the GDXJ, same sort of thing, right? What do we get? We had the exact same thing. We had the movement down, and now we've actually got the rally. We've got the rally so far. So we look at the weekly charts, and the weekly, it's probably where it is right now, right? Roughly around that level where it is right now, around that $36 level. We can really see that that's the major level of support through there. And now we're actually rallying back up towards the $36 level through there as well too. Now that's the short-term picture, guys. The big picture for me when it comes to the mining sector is something like this. Let me zoom up. Right, this is the big picture for me. I've just zoomed out. That blue line is 2030. Okay, I do see something like that happening. I don't know how it's going to happen. Right, we may get a movement up through here, and then we may go back down, and then we may get back up like that. We may do something like that, and then we may get something like that, right? And now that's 2026, 2024, 2026, 2027, 2028. This is this right here is 2024, right? So that's the election time. So we may not get big moves at all for a few years out of the mining sector, but I do believe on the other side of the election, I believe the mining sector is going to be absolutely just crazy. Now, it might start to find a bottom here right now, and that's the reason why I'm long investment-wise, okay? Because I don't know if it's going to be the bottom here, but we may get something like this, and then we may start to see it. We may see the bulk of the move on the second half of this year, or it actually may start next year as the crisis is happening. That's what I'm seeing through there, but I do see mining sector having incredible moves by the end of 2030, which is the reason why I personally am investing long term remember I said before, trading investing is different, right? So investing long term in the mining sector, and then also gold and silver through there. So that's what I'm looking through there. Let's go look at the SIL market as well. So the SIL is doing sort of the same thing as well too. Again, we had this very big move down to the support, and because the market had a much big move, like a very big move down like there, what are we getting? We're just getting what? Some sort of a pullback, aren't we? So if we do look at the SIL, we can see how the SIL is probably has a bit more move to the upside, maybe, right? 32 actually has a strong area of resistance. So that's what's going on there with the SIL market. Look at the silver mining stocks. Wow. They're so cheap right now, aren't they? I tell you right now, smart investors are probably buying the hell out of the mining sector right now, guys. I really do believe that. And then the SILJ, again, we're not at that level of support. We did find we are at that sort of $9 level of support, but we are in this very big sort of downward trend through here on the silver stocks through there. And that's actually looking quite weak. This SILJ is looking really weak. Look how, if you guys have watched this entire video all the way through, I'll talk about this with the actual Nasdaq as well too. So the mining stocks might be getting ready for another big hit on the downside. So I'd be really, on a trading wise, guys, going long right now on the mining sector and hoping for a big move up is very risky, and it's something that I'm not doing. I am long gold mining stocks right now, but that's with the 20-30 view, right? That's the buy and hold for many years, okay? So I hope that makes sense for you guys. So what I want to do right now is I want to bring on the good old Bitcoin chart, and I'll bring up my good old trading view here, my good old Bitcoin chart, okay? So let's actually finish off with Bitcoin. So let's actually look at the weekly charts first. Let's start off with the good old weekly charts. We can see we're definitely in a very big downward trend through here on Bitcoin, right? High, lower high, and now we've actually broken down. Here's the really key, interesting thing about Bitcoin, okay? One thing I'm noticing about Bitcoin is this. If I bring up my trend lines from there, if I delete that one, notice how we've actually had a very big move down, and now we're just going sideways. If Bitcoin does not follow through on the downside through here, if we do not start to get a very nice movement on the downside, we start to get something like this, right? If we do not start to get something like that coming out of the markets, then this is probably going to start to do something like this, right? Something like that. And if we do get something like that, then what we have here is this. On a short-term level basis, we would be breaking above that level there. So on the weekly chart, the big thing I'm watching for on the weekly chart with Bitcoin, even though I've been calling bearish, I've been calling capitulation, I've been calling all that with Bitcoin, maybe it's not going to happen, right? The big key is what happens here, because if it doesn't get that follow through like this, but instead we just get something like this, and then we get another big large bar breaking up like a really big bullish week like that with Bitcoin, that's changed. It's changed. And therefore, that's probably going to be the end of that move. And therefore, we're probably likely to start to see something. It may have a bit of a pullback one week, and then we may start to get a bit of a rally back to the upside. I don't believe it's not a complete change in trend, right? Because the change in trend is what? I move a high, and then we need a high low, and then we need to see something like that. That's a change in trend, right? Just a bit of a rally, an end of move, right? So this is the end of a move, and then a rally, and then maybe then a continuation. So there's a differences between the end of a move. Like if you watch my video all the way through, you would know that the Dow Jones right now is at the end of a move, and therefore we're likely to get a pullback, right? But not a change in trend. And so, because the trend analysis is what? Trend analysis is lower highs and lower lows, but we do get what? We get rallies in bear markets, and same for bull markets and so on and so forth. So that'll be the big thing I'm watching for there with Bitcoin right now. Again, we're just watching this on a short-term level basis. We're just going sideways through here. So if we really start to, let's bring on the 20 moving averages. Yeah, okay, cool. So I'm looking at the 20 moving average right now as well. That's that movement through there, all right? So if we do start to, I'm just trying to get a really good read of this actually. Yeah, okay. So if we get something like this, right, on the good old Bitcoin, it's going to get killed to the downside. Absolutely demolished on the downside, right? So see what I did? I went to the weekly charts with the big picture. Now I've gone to the daily charts, and I'm look at this setup. If we get something like that with Bitcoin, Bitcoin's going to get destroyed probably down to $10,000. That's going to be the start of the capitulation move. But if that does not happen, what if the market does something like this, and then we start to get something like that, and we start to get something like that? That'll be that weekly chart I talked about, right? Because we're looking at the daily charts right now. And then we start to get that movement down. So the bar here, if we do get a strong bar down through here, guess what? It's going to be all over for the sellers and buyers. So that's weekly chart. So this is weekly chart. Let's take off the moving average once again. Right, weekly chart. This will be the big thing I'm watching for over the next week. Looking at the daily charts for a day by day. This actually could be a really good shorting opportunity for me. And then now let's go to the hourly charts through here, right? So now I'm going 3 levels for you here, right? When it comes to even the hourly charts. Look at the hourly charts through here. This could be something. We could be getting ready for a actually no, we are getting ready for a really big move. I just don't know where it's going to be, right? Because look at this here. Every time you go sideways, you end up getting big moves, right? Look at that there. See how that sideways movement? And then we end up getting that big move through there. Look what's happening right now. Look at all that sideways movement. We're about to see a really big move on a short-term level basis. If you guys are intraday trading Bitcoin, excuse me, then we could start to see a really big move. Now, we don't know where, right? We could get something like, we could get a bit of a break to the upside. But if we get something like this, it may get a rally back up, and then we may start to see a really big move to the downside.